Hey, it's Psycho Mark. Just wanted to jump on the channel here. Wall Street sizing up, of course. I want to talk to you a little bit today about downside. We're not going to talk about the stocks on HGH or the dark arts or all over it, or a bull put a horn in my ass or something like that. We're going to talk about downside today. Downside, you got to protect your downside. The last 2 days, the 23rd and today the 24th, the markets have been absolutely down. It's been a bloodbath. Even today, there's a lot of let's just call it red bloody meat out there. I mean, I'm looking at the Dow. Dow's down 145, 0.5%. Nasdaq's almost down a full percent, right? So not a great week, or at least not a great last 2 days. So let's talk about protecting your downside. In the stocks that we look at, the hedge fund stocks that we look at, that we find through 13G and 13D filings, these are typically volatile stocks, right? They go up 5, 10, 15, 30, sometimes 100% in one day. They can also do the reverse, and they can be very bearish. They can go down 5%, 10%, 15, 30%, right? So you need to know how to protect your downside. Now, on large cap stocks, I look at there's something called an 8% rule, at least in my head, right? In my head, there's an 8% rule. And that rule is if the stock goes down in 8% in one day, a large cap stock, if it goes down 8% in one day, boom, I'll probably let that stock go. Or I certainly start looking at the candles like a day trader would. Now on this channel, we don't day trade for the most part, right? But what we do is we swing trade. We hold it 2, 3, 4 days, maybe a week, maybe 2 weeks, maybe 3 weeks. But we certainly don't invest, which is 90 days. But I start looking at the candles. Should I sell half the position? Should I sell the full position? That's what I do with large cap. Now, with the hedge fund stocks that we talk about, which are typically biotech and smaller companies, their average volume is could be way down or under 1 million shares, right? So it's going to be tough to even short no matter what, even if you want to make money on the way down. My point to you is that, so I've got a rule there too. That's the 15% rule. Once a penny stock or a $5 or below stock hits 15% downside on any given day, I start to look at what do I think this stock is going to do. Typically, right then and there, I will probably divest. I'll move half of my position out, right, and then look at the candlesticks and see what else I'm going to do. You need to use your own strategies. These are just guidepost percentages that I use, right? That said, I may leave the position altogether, especially if the stock's a 2-star or a 3-star or sometimes a 4-star stock. It really depends on what your strategy is and what that stock is, right? So that brings me to my second and last point. To do that, you probably need to be classified as a pattern day trader. Let me tell you what that is. To be classified as a pattern day trader, you need to have $25,000 in your account. Now, clearly I use Robinhood because I want people who haven't had access to stocks before to have some easy and clean interface to look at. There are a lot of different platforms out there, a lot of professional platforms out there. Thinkorswim, there's quite a few that aren't free. Thinkorswim is free. But anyway, don't want to get into that. Point is, you need to become a pattern day trader, because what if the stock goes, it gaps up, pre-market 2%, opens up 2%, 3%, then all of a sudden, boom, it's down 7, 8, 9, and it just continues to go down. You need to be able to, let's just say you bought that stock because you thought it was going to be a runner. When it goes down that much, you need to sell that stock. And to do that, you need to be a pattern day trader for the most part, right? There are some different rules. So that's why I have $30,000 in my account. I only trade with 5, right? And typically, I do what's called scalping. Like so one of my intricacies that I do is a strategy that I've done before is that if a stock gets up $200 or $300, I'll just scalp it, and I'll take some chips off the table, and I'll move a few shares out of that position and take the profit. So that's what I do, right? But again, you need to do your own research and have your own strategy. I'm just here to give you the information. Wanted to let you know of a few stocks that that large hedge funds got out of, ELY and NPO. So that being said, we love stocks that are a beacon of hope. We love stocks that that dip and rip. We love that. But again, those are more day trading terms. So we take a longer term approach. That said, thanks for tuning in the channel again. Watch your 6 and go hard to paint. We'll see you.